What if I told you that the key to unlocking consistent profits in the market had nothing to do with actually predicting anything that the market does or is going to do in the coming future? What if I told you that the one thing that you need to focus on and master is the one thing that 99% of traders completely ignore? In the next few minutes, I'm going to pull back the curtain and show you exactly what we do at POW that's led to our members having a 95% success rate within the first 90 days of using our system. It's not about leveraging AI, it's not about some magic bot or some magic silver bullet. This is about a truly consistent and repeatable process and system that you can embed into your own trading strategy today after watching this video to find true consistency and profitability in the long run. In fact, you can apply this to your own trading. You don't even have to use our systems. You could be a manual trader, an automated trader, whatever it is. It could be Forex, crypto, indices, stocks, options. If you take the lessons from today's video and implement them into your own day-to-day operation, you will become a better and more profitable trader. So stay tuned, check out the video, and let's begin. Okay, let's pull up the whiteboard here. We're going to draw up two quick images here. Excuse my terrible drawing, but this guy is happy. This is the systematic trader. Systematic trader, and his buddy over here, he's not so happy. This is the emotional trader, okay? Now, this is a bit overplayed, right? You always hear people talking about emotional trading, how it leads to the doom and the demise of your trading account, and you're going to lose all your money if you trade off emotions. Now, the only way to live here is to have a system to follow. So that's what we're going to get into in this video, right? The systematic trader follows things like logic, data, rules, process, right? The emotional trader, on the other hand, has trades based off of fear, greed, hope. They're very opportunistic. These are the people who, are looking for things where they want limited input and maximum output, right? Those are emotional traders. Okay, and you might be looking at this and thinking, well, I do have a system. I wake up at this time every day. I look for these specific patterns. I trade my bot in this specific way. So you might be looking at this and say, okay, got it. That makes sense. I need a system. But what system? What does it look like? What does it take? How much time does it take? Right? These are all the questions that we get. So just give me a moment. I'll talk about the exact system that we use here at POW, and you'll be able to see how you can implement that into your day-to-day immediately. Okay, so the foundation of our system is what we call our main portfolio. Let me scroll down just a bit, give myself some room. Okay, so this is sort of like your fortress, and this is your main. This is sort of like your fortress of accounts and data. This is your main portfolio. Okay. Okay. So there's going to be 4 chunks to this main portfolio. You're going to have 30 to 40 set files. Okay. That's the first piece of it. 30 to 40 set files in this main portfolio. Okay. That's 30 to 40 different bots running on this one portfolio. Now, inside of POW, we have tools like Portfolio Builder that allow you to create 30 to 40 bots, within a day's worth of testing and immediately push them into this account and begin running them. Otherwise, you'll have to set this up on your own some other way. Or, what you're doing is you're manually back testing. If you're a manual trader, you'll be manually back testing 30 to 40 different strategy variations and then continuing down, right, the same process. Okay. Now, the second part of this is diverse pairs and strategies. Now, in our world at POW, we talk about pairs because we trade a lot of Forex, we trade gold, right, metals, indices in some cases, and other cases less often, but also stocks and cryptocurrencies as well, but primarily Forex pairs and gold, right? So you want to diversify and have a bunch of different pairs in this main portfolio. So of those 30 to 40 set files, you could be trading gold, UJ, NZCHF, Pound U, OddCAD, like all of these different pairs can be pulled in there. You also need different strategies. So for every pair, you could have a trend strategy, a range strategy, right? All of these different pieces and ways to diversify. Okay. Now the other piece, you're targeting 1 to 4% profit on a monthly basis. Okay. So you got 30 to 40 set files, different pairs, different strategies, all built to target 1 to 4% profits overall. That's at the beginning, right? Okay. And now the goal of this overall, you're going to be collecting data. Okay. And this is key. This is the key part. Okay. So the whole purpose of this main portfolio here is to collect data, right? So we're going to take that data and we're going to move it down the stream. You'll see what we do with it here on phase 2 of this process, right? So now this is going to be called best sets combined portfolio. Okay, let's do that. We have this large portfolio here, 30 to 40 set files, right? We're collecting data off of that. Now what we're going to do is create a smaller portfolio. It's going to be a bit more lean, but this thing will be, this is a more of a powerful portfolio. This one is going to be the best sets combined portfolio, right? And on this one, we're going to have kind of the same concepts here, except instead of the 30 to 40 set files you had up here, we're going to trim this down to just about 15 to 20 sets. Okay, so now we're going to have, as opposed to the 30 to 40, we're going to cut that in half to about 15 to 30. We're still going to keep these diversified, right? And as we did before, we're going to basically look for, let's say, 2 to 4% here, but this is going to be dependent on how we're going to leverage this portfolio, and more on that later. So we're going to build a baseline foundation that's going to do better than the original set on a per set file base, or sorry, better than the original portfolio on a per set file basis. We have fewer set files, less exposure, but we're still going to extract the same or more amount of profit out of that, and we're going to keep it diverse. The goal of this, I should say, is to capitalize. We've now done work here to figure out. We've taken a broad stroke approach here with 30 to 40 set files. We've collected data. We've trimmed that into 15 to 20 set files, and now we're going to capitalize on the confidence that we have in those 15 to 20 sets and the live market data that we've received from running them, right? So we've now optimized, gone from a broad search to a now more optimal search. Okay, what we've done is we've handpicked the top 15 to 20 best performing set files from the main portfolio. These are the ones that have absolutely proven themselves in the real world, right? We've now had them alive conditions for a set period of time, right? These strategies are validated, and now we can afford to take on a little bit more risk with these set files because we've got some confidence. We can take calculated risk and accelerate the growth, right? So that's how we really start to see impressive returns out of these set files and out of these portfolios, okay? But we still have this data-driven foundation where we're still keeping the process the same. Actually, we still are going to learn from this. We're going to continue to collect data also. So while we are capitalizing here, we are still also collecting data off of these, and we're still going to optimize further. Meanwhile, while this is running, you still do have this part running as well, right? So what your process starts to look like at this point is that you always have this large chunk here, which is your 30 to 40 sets, and you're learning from those, and then you're peeling out 15 to 20 into different, more optimized portfolios. So then over the course of time, you end up having multiple 1, 2, 3 high value portfolios, each of these, designed to profit, but there are, 15 sets, 20 sets, right? 15 to 20 sets in here between each of these, right? And they're all diverse inside of each other. These are diversified. So they have, currency A, currency B, currency C, right? With different strategies as well. So they all look diversified, but then they're also diversified from each other. So you've got diversification within the portfolios themselves and amongst all portfolios. So now you've really created a powerhouse here that you can now deploy onto prop firm capital, live funds, cent accounts, whatever it is that you want to do. But these are all, we have high level of confidence in each of these. Okay, and now you can actually go a step further with this, and you can start to then go to the next layer where these actually come down and create even more refined portfolios, right? And you can have, for every one of the above, you might have 3 to 5 of the below, right? So these will all get pushed down into here. Now what these are, if we were to zoom in on one of these, right? We put dotted line around here, right? And let's just zoom in. Like, what does this actually look like? Well, this looks the same as above, really, but instead of the large number of set files, these ones will actually have 3 to 5 hyper elite set files, right? So of everything you've seen, what are the 3 to 5 absolute best ones, right, that you can really push the limits on? These are high risk, high reward sets. So for these, we're looking for more like 5 to 10% gains, right? These are 3 to 5 set files we've handpicked, and we've looked through and said these are extremely good set files. We're okay pushing the risk. Let's increase the lot size. Let's aggressively trade these. And why would you aggressively trade something? Well, for example, for prop firm challenges, right? Maybe you want to pass a prop firm challenge. Maybe there's a time limit. There's really, with prop challenges, it's fake money. It's simulated environment. You can open up 3, 4, 5 different prop challenges from different providers, and you put a handful of aggressive sets and you try to play the numbers game, right? Half of them pass, half of them fail. Well, that's a good ROI in terms of the amount of funded capital that you're going to have to trade with, right? So if you have the confidence in these sets, you can open up multiple, and you can do this, right? 1, 2, 3, 4, 5, right? On and on, as many times as you need to, pulling from, your tested portfolios here and then hyperfixating on only the best set files of each of these in order to create these aggressive micro portfolios to then leverage. So now what you've got here is, if we zoom out once again on this whole picture, right, you have one portfolio here that's got 30 to 40 sets constantly, right? And this is rotating around. You're constantly pulling sets out of it and putting new sets into it, right? So you're funneling in new sets are going in to the bucket, right? And the best sets are going out of the bucket, and then your worst sets are going in the trash. They're leaving, right? So it's constant flow. And then as the best sets get pushed down, they get pushed down into these, larger high performance portfolios. And then once again, you are taking the lead sets are going to get pushed down to the next tranche, which is then going to be your high performance sets. And of those, you're going to have, a bunch more, right? Okay. So this funnel will continue. You will constantly be re-optimizing this entire funnel, and you will be trading on prop challenges. You'll be trading in live capital. You'll also be trading on demo, and you'll be able to then grow your portfolio to have, ideally, then you get into this mode where you have your live capital. Let's put a circle around that, right? You then have your 2 to 4% gains on average across that live capital. You then have this concept where you have live capital being traded. You then have, 2 to 4% growth on a monthly basis. And then you have prop challenges and prop accounts, let's say, right? So you've got this, you've got this, and you've got this. And there's this concept where you're using live capital to make 2 to 4% growth. You're then taking that 2 to 4% growth and you're reinvesting it into gaining access to more funded accounts. And then you're taking the prop accounts that you're getting, and once again, you're making 2 to 4%, and then you're reinvesting that into your live capital so that you can, again, make 2 to 4%, get more prop capital, make 2 to 4%, get more live capital. And this cycle repeats itself, and that's how you grow an empire of tradable capital without really risking any of your own money upfront, except for whatever the initial investment is to fund your first account or purchase your first prop for a challenge, or whatever it is. Okay, so now if you're wondering, how do you manage risk with all of these different portfolios? How do you know the settings of these portfolios? How do you determine what a good and a bad portfolio looks like, or a set file looks like? Well, I'm going to tell you now, in our one-on-one coaching program inside of POW, we go extremely deep on this. There is a full SOP too, just for our standard members, that actually showed very specifically, number one, how to create portfolios like these, but then also what lot sizes to start with, how to tweak the lot sizes, how to determine based on number of sequences that a trade opens or that a portfolio opens, if it's good or bad. There is a POW score that actually automatically analyzes every single set file and determines whether it's consistent and reliable, right? So there's all kinds of tools and different things that we give to our members that allow you to take this process, implement it, but then also sort of be spoon-fed the answers to tell you which sets are the good sets should be pushed down to your elite portfolios and which should be put in the trash, which should be held for further testing. But I will tell you that at a high level, for those of you here on YouTube watching the free content, this is sort of the axis between we have number of sequences, we call them in POW, but let's just say, we'll say number of sequences, or even trades. I mean, that's a basic way to think of this, is how you can look at the trade volume. Okay, so you look at this as per sequence. That's what we call this. Okay, and in POW, a sequence is a set of trades that the bot is taking, and how many trades in that sequence determines how much risk actually that given set file had to take in order to return a profit, right? So if your trades per sequence is 1, for example, that's low risk, and if it's 5, then you're getting higher risk, right? And then on the other side of this, we have our lot size, right? And a lot size could be as low as 0.01, and then let's go all the way up to, let's say, 1 maybe, right? On any given account size, this would be different, right? Higher account size, higher lot size to start with, but just generally speaking here, right? So if you have a situation where you don't have a lot of trades in any given sequence, you trade with a higher lot size. Basically what this graph is showing us is that the more trades per sequence, the lower the lot size you're going to need. Okay, so in terms of your quality, so you're going to look at this chart, and basically the higher the lot size, the fewer the trades per sequence, the higher lot size you're able to use and still keep it within a decent risk parameter, right? So your risk is going to look something like this. If it's low lots traded, okay, so if we break this into quadrants here, not just quadrants, actually, we'll break this into chunks so we can go this way, kind of cut this in half here, and then we can cut it into kind of triads this way, right? In these areas on the outside, basically what you're seeing is here you have high risk but low reward. The reason is because anytime you are trading, you're trading really large lot sizes, but you're not trading very much. So you're not in the market enough to see the rewards that you need to pass a prop firm challenge, for example, or to see consistent gains. Down here, you have low risk, but still low reward for that same reason, not enough trade volume. So this becomes sort of a red zone here where any SEP files that live here would be considered, not ideal. On the opposite end of the spectrum over here, you have a lot of trades, so you have high risk and potentially high reward, but the risk is too high. So up here, where you have anything on the bottom is sort of opposite, right? Your lot size is so small that the reward is never going to be large enough. So you might be low risk, low reward, like in the bottom left down here, but you're never going to make any money. And then over here, it's kind of still the same thing, yet you have a higher volume, but still your lot sizes are too low to make any money. So really what you're looking for are things sort of in the sweet spot. Like this is your ideal zone right here in the middle, right? This would be the perfect SEP file, has a moderate lot size with a moderate trade volume. You're risking the right amount and you're getting consistent. The trade volume starts, the number of sequences and the trade volume starts to get a little high. So your risk is sort of getting a little bit out of control. And then over here would be the pink as well, because your lot size is in line, but the trade volume is so low that it's not really earning you enough to get the results that you want to get. So really what you're looking for is this center zone right here, right? So as you start to analyze and watch your portfolios play out, you're going to be looking at the lot size and you're going to be looking at the number of sequences. Now, of course, the modification, anything that ends up in this zone here, the modification that needs to be made is very simply push the lot size up. And the modification that needs to be made here would be to push the lot size down. So really anything in this center quadrant here or center triad here is really the zone that you're looking for. And anything above and below, you would remove. What you can't do is change the number of sequences that are being opened, right? So what you're really looking for is if you're in this sweet spot of sequences, well, then you just need to level set the lot size so that you end up in this middle zone. So ultimately, that's the key metric that you're going to look at, is how many sequences are being opened on those trades as they're set up, as the EA has them set up, right? Okay, so that's the system that we use inside of POW and that we teach, and we go so much deeper on this with our clients. And we've got very specific step-by-step guides on how to set up these portfolios. And then we analyze and review the results of those portfolios with our coaching clients, as an example. And we start to dissect what's working and what's not. And then we make the tweaks that are needed so that everybody can get into that middle zone. And those are the ones that you're going to deploy into your live capital, into prop challenges, and so on, as you've seen here. So click the link inside the bio to learn more about POW. You can apply to become a member. You'll go through a series of a few questions. If you're approved, you'll then be taken to an offer page where you can sign up. What's in the program, that's where you can inquire about one-on-one coaching after you've gone through sort of the basic onboarding as a member, just to learn the basics, the fundamentals. And then from there, we can help you grow. We provide access to instant funded capital as well, so you don't need to pass a prop firm challenge. We supply all of our members, starting with us with $100K in funded capital, the ability to expand that into $200K in funded capital for those who would like that. So it's just so much opportunity inside of our community. And then we leverage the tools that we've created to execute and see the result that you've seen in other videos throughout, showing our community and so on. So if you like this video or saw any value out of it, leave a comment, subscribe, and we'll see you on the next video. Thanks so much for joining.